Good evening, everyone. Hi, this is Meet here. It's a pleasure to welcome you for yet another session on the cybersecurity and the resilience framework. Um, I will welcome my colleague Narasim, who's been our co-founder as well as the cybersecurity practice head, who comes in with a deep experience in global audits, SOC audits, and other regulatory cyber-related environments. Um, Let me start with a simple thought here today. Cyber incidents are no longer a possibility, they are an eventual certainty. It is just about how it's going to happen and when it is going to happen. Is your organization built to survive one? Is something that we would discuss today. Um, we will look to keep this session interactive. We want you to pose questions, see your reflection on how we think about the cybersecurity framework, which is effective currently at GIFT, and then let's break it down together if there are any questions or any thoughts around what we discuss. Quick introduction about Narasim. Narasim has 15 plus year experience. He's a cybersecurity expert, auditor, author, and a keynote speaker. He is recognized as among the top 10 influential leaders by CEO Insights and has led global engagements for us as well as his previous entrepreneurs in cybersecurity audits, SOC audits, IT attestation functions, and other tech related reviews. He's done around 5,000 plus audience in the times that he spent over a lot of webinars. Very quickly about me, I lead the Gift City practice for Incorp, a chartered accountant, but not restricting myself only to the CA knowledge that I have. I've been into business setups. I've been into accounting, taxation, and across various other fields. I've been focusing on GIFT for the larger 3 to 4 years and have been helping clients understand the direct, indirect tax and international tax compliances across the jurisdictions that we are talking about. Um, Quickly, the topic for today is about what is SERF, how does the regulator want it to be reviewed. Before we get into the framework, would request Narasim to talk about what is the background, how does it shift from protection to survival and continuity. Over to you, Narasim.
Thank you, Meet, for setting the context very appropriately. Very nice to meet all of you. A very good evening to all our dear friends, members, and professional friends. Let me get started with one very basic thing. So living in the world of AI. We know that applications are replicated within a few minutes. Somebody says, "I write a prompt, I get fancy things." Also, on the other side, what is happening is the risk landscape is significantly increasing. Now, considering all the changes which we are going through, one of the things the regulator felt is that we need to safeguard ourselves. And what better way by defining a structure and a resilience framework? So that is why SEBI, I'm talking about SEBI, not IFSCA, SEBI first came up somewhere in August 2024 with a framework called as SEBI Cybersecurity and Cyber Resilience Framework, which matured over a point of time with feedback and other things, and this was applicable predominantly for the mainland, right? And then IFSCA came up with this requirement in March 10th of 2025, which is exactly a year before, and it said from 1st of April this becomes applicable, right? So immediately they have notified it. So IFSCA guidelines on the cyber security and cyber resilience is become effective since the last year, and this is the first year for which the compliance period is defined. Now, what is very important you'll have to understand is this is the first time they've structured a very, I would not say, extremely detailed like the mainland guidelines. There is definitely some scope for interpretation, but it is a first of its kind cybersecurity framework or guidelines which has come up within the GIFT. So what does it focus? It focuses on the cybersecurity elements, starting from protection. How do you safeguard? How do you protect? They've divided into multiple phases, including your infrastructure. It also interestingly speaks about resilience. Resilience is ability to withstand failure, ability to withstand attacks. How are you able to get started? And this also focuses on business continuity. This is overall with an objective to ensure that I am able to get some sort of a trust in my systems which are operating within GIFT. Because if you see within GIFT, there are two types of a setup, right? One is basically own fund. Second is a lot of investor related fund. That's broadly the two themes. So in all of these cases, there is definitely a necessary for me to showcase that my cyber systems of all the registered entities are fairly safe. And that is where this guideline has actually come up with.
So, so the framework is designed basically to ensure that the systems are protected, the attacks are contained, and most importantly, the gift ecosystem is preserved. Understood the interpretation from resilience to security to other topics. Now, quickly coming to who is this framework applicable to? Who will be required to comply? Whether all regulatory entities are required to do it, when to do it, and how important is the proportionality? How does it work? So over to you, Nara, on this.
So if you look into the framework, as I said, this came up in March 10, 2025, 1 year back. And they clearly say this guideline is because it comes from IFCA. It has applicability across all the registered entities. So RE is the words. I'm sure those of you who are in the compliance space will appreciate that. And typically, if you go to IFCA, these are all the different categories of registered entities who are operating within the IFC, right? Or rather, who have got a registration under IFC and operating within the GIFT. So literally all of these entities, it would be applicable. And remember that while some organizations are 1 member team, 2 member team, 5 member team, etc., some are dealing with significant lesser risk, higher risk, etc. So therefore, they have said this guidelines, we will use the principle of proportionality. And that is a welcome initiative because they don't expect everybody to have the most complex systems in the world. Now, for example, you might probably operating with 2 or 3 terminals with a very basic level of security, which is reasonably accepted as long as for the system, for the scale, whatever nature of activities you are involved, and the interconnection with the ecosystem, as long as you are having due care and cyber resilient system, they're absolutely fine with it, right? So the principle of proportionality is very important, that this is where interpretation comes into picture based on your nature of activities, interconnectiveness, etc. I'll just give you one example to clarify this. Some organizations are typically using off-the-shelf application. And when they use off-the-shelf application, they're typically saying that we will subscribe to ABC service provider and we just are going to follow that. There's nothing beyond that. So given that situation, my risk is little lesser because I'm heavily dependent upon the service provider's offering. On the contrary, some of the organizations have built their own setup. For example, if you look into it, they would have said that, I would have probably used my own software or my own solution. In those cases, the risk is a little bit more. So therefore, I need to factor that.
Noted. So basically, not all entities are required to or are treated equal in the framework, but it depends upon your scale, complexity, nature of activity, and your exposure specifically to the risk that we are talking about.
Absolutely. Absolutely.
So let's discuss the most important and the most critical point of the evening, which is what is the amendment which has been brought in by FSC? How does it reflect on the last year as well as the current year? Because now we are on the verge of completing our last year and the next year is just kicking in. So what does the organization need to look at and what they need to understand from the framework that has been or the changes in the framework that has been brought in?
Very important and very pertinent question. This is the crux because March 10th, 2026, exactly 1 year from the original date of circular, they have clarified certain things. And I want to be very specific, very categorical, and spend a few minutes over here. The first thing is we all have understood this guideline is applicable for all REs. There is no second thought about it. But paragraph 21 of the last year's circular had lot more people whom the exemption was given. But this year, they have cut down that exemption. So they are saying only for 3 categories of entities, I will give a conditional exemption. That is, first, if you are a branch of a regulated entity and a foreign entity, please note they don't use the word subsidiary. They use the word branch, which means Within GIFT, I am not set up as a separate legal entity. It is an extension of a branch which is based out of maybe a foreign company or an Indian organization. That is where it becomes very important. Now, I am a subsidiary in India, wholly owned subsidiary of a foreign company. Will I be treated as a branch? That is a question of interpretation, because typically a branch of a foreign entity, how you'll have to set up, please look into your certification and how it is being set up. First point. Second, GICs, these are typically those who do captive work, right? Exclusively for in-house entities, right? What you call it as global in-house centers. Similar to the GCC concepts in the commercial world, here we call them as a GIC, right? So GIC provides services only to the group entities. Very, very important. So these entities, you are permitted. Again, it's a conditional exemption. Conditions will come to it. Third, REs which have less than 10 employees. Now, I want to give a small disclaimer over here. The paragraph 21 of the earlier circular also had foreign universities. We'll address foreign universities a few minutes from now. Please wait. Second, paragraph 21 of the earlier circular made a mention of all these three, no doubt. But now, if I read the new circular, which is of 2026, all these three are there, but there is an and which is mentioned after point number B. That is GIC, and they say RE having 10 employees. So from an interpretation standpoint, one could say only if you're a GIC with less than 10 employees, you can claim the benefit. But to me, it is a three different isolated transactions still, even though they've used the word and, because the whole purpose of the circular gets defeated. Informally, we have had a conversation with the regulator, which you have to interpret all these three as individual categories. That means mutually exclusive. However, it is recommended, if you have a clarification, write it to the IFSCA. It will be very good for you to get this clarification first. So hopefully, Meet, you got a understanding of who are the three categories.
Got it.
Now, very, very important is conditions of exemption. Okay, by the way, this exemption is for 3 years. Earlier, they're not defined this as exemption for 3 years. Now they've defined as an exemption for 3 years. Now, this conditions of exemption is very important. First condition is the RE has to adopt a similar policy of the parent or the holding company. Very, very important. You have to adopt a similar policy of the parent or the holding company, which means first question you need to ask is your parent entity wherever located, do they have a policy or not? If the answer is no, my apprehension is you will not be entitled for an exemption here in India. Second, whoever is the CISO of the parent or that respective entity, he or she shall act as a designated officer under this particular RE. That is another important thing. Now, what is the purpose of a designated officer? It is basically for compliance, for periodical reporting, and some sort of updates, right? So that is the second important. Third, the parent entity or the holding company should be governed under a similar regulation abroad. Now, there could be certain countries, hypothetically presume a Cyprus or any of those, assuming, again, I use the word assumption because I'm not giving a legal interpretation. Assumption is that if the parent entity over there, it is not regulated by a regulator or a government body in home jurisdiction, then the unit over here will not be subject to any sort of an exemption. Next, whoever is the designated officer, he shall submit 90 days from the end of 31st of March. Maybe you can go back to the previous circular. Yeah. Within 90 days of each financial year, you shall make a declaration. The format of the declaration expected shortly. You shall make a declaration that you are adhering to these guidelines, right? And RE shall submit an annual cybersecurity audit report. Remember, last year it was mentioned exemption is blanket. This year, they have said that exemption shall be based on an audit report submitted by the IFSCA auditor, who should be looking into some of these elements and issuing that. So this is the first and foremost exemption. I have spent a lot of time on this. Hopefully our audience have got clarity. There is also additional paragraph which is added, paragraph 23, maybe you can go to the next slide, which says these are new conditions. These are new conditions. What do they say? Now, new entities. If you are a foreign university, if you are a newly incorporated standalone entity, that means no parent sort of a thing, or if you are a credit rating agency, in these three cases, you are given an exemption again for a period of 3 years from the date of issuance. So issuance is what? Issuance of this circular, which is March of 2025. So technically 1 year exemption is already over, right? You just have only 2 years of exemption. And only here extra requirement is submit a declaration within 90 days and designated officer shall be there. So here you don't have an audit requirement, right? So just to summarize, these three whom you find, out of which foreign university has continued that exemption, what was there in the previous circular as well, but just that it is moved from a conditional exemption to a sort of unconditional exemption, but still you need to have a designated officer and you need to submit a declaration. As far as the rest of them is concerned, it remains the same, 3 years exemption, and you need to submit an audit report and you will have to adhere to some of these requirements, right? So that is something very, very important. All entities will have to look into. I'll also give 1 or 2 scenarios for you to think of it. Now, there are 4 or 5 founders across the globe who have pooled in money and have invested into this particular entity. Now, you cannot call this entity as a foreign subsidiary or a branch. On the contrary, let us say a fund accumulation has happened in Dubai or Mauritius or Cyprus, wherever, and from there the fund has moved into the GIFT city. Then you can say, yes, that is a parent, this is a child or a holding subsidiary. Then you go back and check all your exemptions, whether it is applicable or not applicable. Now, if I am a parent or a subsidiary in India mainland, example, there is an ABC Limited, which is registered under SEBI for some category. Similar categorization it is got under GIFT City, which is fine. So you will now check whether you are compliant under the SEBI CSCRF guidelines. Since that is a larger guidelines, there is a possibility for you to claim an exemption. But remember, if the number of employees are exceeding 10, whatever may be the situation, parent side, etc., it doesn't bother, you will not get the exemption. So those three has to be interpreted carefully. Back
So,
to me.
so the very key insight, guys, here is basically even exempted entities are not exempt from accountability. So, even though you will see some relief, there is a structure to the transition, and there is a requirement when you come from a limited compliance to a full set of compliances. And that brings us to the next set of questions: is what are the pillars or what are the key areas that we need to look at from a framework perspective? Uh, Nara, which kind of pillars does the organization typically underestimate, or they would not understand the importance of it unless it has triggered certain risk at the entity level? Do you want to give your thoughts on around it?
Sure. See, broadly, if you see, the whole framework has got 5 parts. The first part talks about governance. In simple language, tone at the top. Most of us know when you are purchasing and selling some sort of a security or performing a transaction in gift, it is not random judgments which are done. There is somebody who has authorized you. And how does that authorization happen? Maybe a board appointment, a letter, anything on those lines. So that person or the authority or the committee is the oversight. So they say you need to have an oversight system. Now, they are not rigid saying this is exactly what I want as oversight. It could be a governing board, it could be a CIOs, MD, CISO, CXO, whatever, or it could even be a committee. So, flexibility is there. Remember the principle of proportionality means which I made a mention. Second, this governing board should have some sort of an expertise or knowledge relating to cyber risk, right? It should be that, some sense of visibility and other things. They don't say, okay, they need to have this sort of a qualification and all of those things, but they will have to set the tone of importance of cybersecurity. They also say you shall appoint a CISO or designate a person who is responsible for it. Remember, the SEBI CSCRF guidelines require a mandatory CISO in certain cases, especially are the last 2 or 3 categories. Here, there is no mandatory CISO, the choice is given to you. If you are appointing a CISO, fantastic. If you are not appointing, identify a senior person or a management who will perform these activities, and such person shall be called as a designated officer. This is the pillar of governance. Next comes the pillar of resilience and security. As the name suggests, it starts with, you have set the tone. What is the policy you have? What are the assets you have? A simple example of assets is some of you in the GIFT city are working in a co-working space. So therefore, your assets would typically be your laptops and machines. And if you have hosted something on the cloud assets. Some of you might have terminals, VPCs, virtual cloud, whatever it is, all of those. Some of you have your dedicated office space. So you would have had an internet connection, you would have a firewall, you would have certain solutions. So all of these comes under asset identification. Once you've identified the assets, question is, how are you doing the risk assessment of that? The moment you know the risk, how are you protecting it? A simple example, do not think physical protection only. We are talking about logical, digital, virtual protection. That means you have a firewall. Can somebody break into the firewall and still attack your system? That is where it comes into picture. Then the moment you have any large system which is having an exposure or your own on-premise system, etc., vulnerability and penetration testing becomes very important. They say, in fact, you have to do it for all critical systems at least once a year. So my dear friends, if 2025-26 you have not performed a VAPT, my apprehension is it is too late. We'll have to seriously look into it, right? Next is third, it also talks about recovery. It also talks about backup, how do you restore, all of those things. There are, of course, points on incident, audit trail, all of these things. Then comes something called third-party risk management. This is a simple setup where if you are using the services of vendor, how sure are you that the vendor is adhering to some of these guidelines? Because your data is residing in vendor. What if he has a breach? What if he has some sort of a thing? So this is increasingly, from a global perspective, as well as from an India standpoint, third-party risk management is something which you have to carefully look into. I'll give you an example, Meet. During one of the conversation with a GIFT entity, the entity told, sir, the application and terminal is developed by a third party. I said, I'm okay. If that third party has to perform a change in your application, how will he do? I will send him an email, he will do the change. Great. How will he deploy the change? I asked him. Sir, he has access to my system, they told. This is a classical red flag. While I am not saying that they should not have access, question is, what control do you have on that person's access? That is where the challenge comes in. So you need to make sure that the third party risk has to be clearly defined, documented, very important, monitored. And last is communication awareness. This is easiest thing which you'll have to do because periodical incident training, cybersecurity awareness training, password hygiene, etc. So these are some of the things which is going on. And RE shall establish some sort of a channel so that employers report some suspicious activity. In fact, as a matter of fact, me last year we did a few just information security awareness sessions for so many participants that they just came, participated, took a part of it, took 1 or 2 surveys, and they were happy, and they just issued a proof of compliance that they have had this as a process. And the last one is annual audit. So it is either done by a certain empaneled auditor or a auditor who has CISA, CSAM, some of these certifications and who has an experience in doing this, like some of organizations like us who come forward and do this. So this is the 5 broad pillars, and if you notice this is way lesser than what the mainland cybersecurity requirements are, but it is compact considering the size of GIFT City.
So this completes the full cycle from a policy, from a framework to the proof side of things. Um, I won't want to go deeper into how governance is looked at and how will the regulator expect things from the leadership of these regulated entities that we are looking at, because now it is very clear that the cyber risk is also a board responsibility. They have to appoint someone on the ground who is responsible for taking charge in case there is an incident happening. A lot of awareness is going through the leadership, through trainings, through periodical reports, etc. So the culture has to be driven from the top to the bottom. So now it's not like that the IT team will handle it. It is basically the leadership also needs to get involved. So how strong the governance requirement are is something that would be the next question that I would raise to you now on this.
Very pertinent question. I did give an intro in the previous portion of it. To me, governance structure is a threefold. One is basically who is there to oversight, or who is the oversight authority. It could be management, it could be MD, CEO, whoever it is, right? Second, do you have a CISO or a designated officer? Please bear in mind, in certain cases, when you are claiming exemption, your parent entity shall be responsible. But I'm going to tell you a practical challenge. I have a Singapore fund. Singapore fund has set up a subsidiary or a branch or whatever you can call under the GIFT requirement. Singapore has funded. So this is an entity which is eligible for exemption. But the challenge is the Singapore entity's designated officer or the CISO shall act as the designated officer here in India. This is a very difficult and a practical step because a Singapore officer will not agree to be a designated officer here because he does not know the law of the land and he finds it very difficult. So this is going to be a practical challenge. So in that case, how do you circumvent it? You may not perhaps get the exemption at all. So you may have to rethink on certain things. So my suggestion is please relook from all angles. In fact, towards the end, we have a small assessment mechanism, Meet, which will also speak about that. Next is the board expertise. While they don't expect you need to have so much of knowledge, a good amount of expertise on the top risks of cyber is something which is very important, and they ought to build a culture of cybersecurity awareness. So these are typical governance expectations.
So it's going to flow down from the governance, but now moving on to the next point, which is how do you implement once the governance is set in place? What are the high level areas, identification points that we need to look at? What are the controls? What does the incident management look like? So the most challenging part in any process is the execution and the challenges behind the execution. So where does the organization struggle the most? Is the next question that I have in my mind.
Sure. So I'll take a couple of them. First, what are the specific requirements? As I said, it all starts with discovery of what you have. So the first step is always asset identification. And how do you differentiate between the different categories of assets? Now, there could be a terminal which is dealing with a lot of sensitive information versus there could be an accounts admin who's probably just doing a very basic accounting work. Not both of them are sensitive or the same level of sensitivity, right? So that is where the first step is. Second, what are the security measures you are following? It could include measures like a NIST or an ISO, security, hardening, patch management, all of those comes there. Third is how is access governed? Who has access? Segregation of duties, conflicting rights, ensuring a bare minimum multi-factor authentication is in place. Now, many of them say, sir, I have a firewall, I have an application hosted, therefore MFA may not make so much of sense. So in that case, my question is, I agree your application is only within your environment, but your firewall, if it does not have an MFA, you are able to get a bypass. So therefore, you will have to look from multiple angles from an access control. And of course, this physical security, how the access restrictions are there. Typically, you follow a sort of a secure lock and key system, and reasonably how from external damage it is taken. So this is the first set of requirements. The second set of things is something to do with ethical hacking. Meet, you can probably go to the next slide, which is on vulnerability and penetration testing. So have you performed VAPT for all key components? And you have to do it once a year. Second, you have a BCP plan. Have you tested the BCP plan? Tomorrow, if the system is down, have you had an alternative arrangement, right? Then, of course, is your incident management, tomorrow how issues are going to be identified. And last is, of course, your audit trail, which talks about list of all assets, how do you maintain all of this. So that's basically the high level requirements.
Got it. So once the execution challenges are tried to be answered, basically now the bar is raised, and let's say the incident is happening or is going to be there is going to be a cyber risk that is detected. So when does the regulator want us to report it? How does it happen in real life scenario? Because it's going to be very cumbersome to see this kind of attacks or this kind of incidents happening, and how are organizations typically meeting their timelines in terms of the regulatory readiness or the compliances that are around reporting of such threats?
Let me clarify a few things here. What is an incident? An incident could be any sort of a compromise on your system. Now, what could be a compromise? It could be somebody sending some random ransomware message. As a result, your system is compromised. To somebody trying to attempt to hack your system, it could be a variety of things. Generally, such an incident happens. The regulator says you need to inform at the earliest. And here they have kept the timeline of 6 hours. 6 hours. That means if something happens within 6 hours, you will have to initially notify. Now, please understand, GIFT is a very, very closed ecosystem, including your internet connection, which is coming into the entire setup, is reasonably monitored. I use the word reasonably. You know, it's not practical that 100% we monitor. So when you are reasonably monitoring that, that means the first level of attack itself is mitigated by the GIFT's overall monitoring
Ecosystem.
ecosystem. But then still the traffic still comes in, you are able to access. Now, some attack happens into your system, unless you notify to them, they will not be able to alert other entities that they have to take a preventive care. Just to give an example, today we know what is happening in the geopolitics. There is a lot of state sponsored attacks which are happening on countries, right? For different reasons, which I don't want to discuss at this point in time. But the reality is that these conversations or these attacks are taking place. So the 6 hour rule is so that we make the earliest intimation. The moment we make an intimation, my dear friends, it is going to be very quick internally to cascade. Point number one. Second, within 3 days, an interim report has to be submitted. What is your finding? What is the impact? What is your claim? Within 7 days, you will have to figure out what action you've taken, and within 30 days, root cause analysis. And let me tell you, regulator is damn serious about this. So my bigger question to you is, how do you build a system where you get alerts on such incidents? That is where it matters a lot, right? So you need to have some sort of a monitoring system. Some of the organizations take third-party solutions, some of them subscribe to some alerting system. It is a question of time and interpretation and how you define it. But this is something which is non-negotiable. And let me tell you, not just here in the gift, even in the mainland requirements are there like this. And also globally, incident reporting is very important.
Now, the crisis readiness is not only difficult but challenging because the turnaround times are very, very sharp. GIFT is trying to match a lot of global jurisdictions, and I think that is where the whole timeline is being reflected or benchmarked with. Um, we discussed about hiring third parties, solutions, etc., in terms of our day-to-day operations, and there are a lot of risk around those third-party risk, the audits requirement or the standards that they maintain, because it is basically their standards which is what we will reflect in our reports or we rely upon our reports. So, I wanted to understand about how does the security posture when the third-party environments are involved are being looked at, what are the kind of reviews that are expected by the vendors at their place so that the responsibility, even though it lies on us, can be mitigated some way through their better risk metrics or controls that are placed. Even though the exempt entities may undergo audits or may be required to do certain set of compliances, what are the typical red flags as an auditor you will typically see in this kind of third party arrangements?
Okay. First and foremost, third party refers to any vendor whose services I'm using. but it should be read in the context of my business. I might be using a housekeeping agency services, may not be something very substantial. Whereas I might be using services of a application developer, software programmer, etc. So those are something of my concern first. So collaborate with your vendors, get the entire information security posture about them. Understand what they would do, what you would do. I'll give a classical example. Vendor is given you a platform, you're working on it. But the vendor would say your business continuity is your responsibility. Now, how do I take care of it? Right? Vendor itself is not governed under ISO or any other circular or any other guidelines. So how do I know that the data with the vendor is safe? So like this, there are a lot of open-ended questions. So they say critical vendor once in 6 months, you need to do the review, right? And if it's a non-critical, obviously periodical check. They also ask you to define escalation procedure and who the responsibility is. So that's on the third parties. Now come to the audit requirements. Yearly, as I said, you need to have an annual audit, which is obviously submitted, which is either a certain auditor or a professionals like a CISA, CSM, etc. And you need to ensure that within a 90 days from the end of financial year, you have to submit it. So technically, we're talking about March 31st plus 30 days of, effectively 29th or 30th of June-ish is basically where you'll have to adhere to this entire.
So a lot of tricky positions, lot of processes, lot of third party checks in place. Coming to what are your experience in terms of understanding how are these challenges going to be mitigated? The common set of questions that I would think is how do I build my security policies when there is a vendor management, internal, external? How do I make that 6 hour reporting timelines? And then how do we finalize the set of auditors that we are looking at? So a few thoughts on the biggest challenges that I personally feel that is going to be faced by a lot of entities in GIFT.
In fact, more or less I agree, but let me tell you, today I can take the circular, put it to chat GPT and ask it to generate policy. It will give me that. Let's be very honest. Question is practical nuances only I know. I know meaning the organization knows, right? So you cannot go with the head that okay, I'll create the policies with some of the AI solutions and therefore I'll be compliant. Maybe you might, but it will still you may not be able to test the entire system first. Second, the interesting challenge is proportionality. If you see the very first section we spoke of, the control and the cybersecurity measure should stand the test of proportionality in terms of complexity and risk exposure, and that is where expertise is required. Professionals like us are required. As far as framework, I think is more or less okay. The VAPT, obviously, you require experts. Incidents, you will have to define a policy and procedure. Third party is a concern. I think we've spoken enough about it. Incident reporting, how do I make sure my team is aware and bring them to report incident is definitely a cause of concern. And of course, getting those sort of auditors with that certification or who have that expertise, right? These are typically some of the use cases or challenges which we have come across. This has been in the last 1 year. In fact, a lot more people, would get started in the next few days, but that is where we are.
A lot of challenges to comply with. Of course, the business ask is such, the risks are increasing day by day. Um, I'll come to the next point, which is how do I set my roadmaps for the compliance piece? It's very difficult to focus on something in this core area because this is something that is new for the whole ecosystem at large. I think SEBI brought it a couple of years back, but IFSC as a developing regulator, as a regulator who's looking up to a global benchmark, how does the entities which are registered under this domain can look for their set of compliances?
Okay. So in fact, if you ask me, the first starting point for you is please be aware what your circular is, what your process is. So that is where the whole game comes into picture. Identify the requirement. In fact, for all our clients, we're just saying that, hey, first figure out how you have to get started because are you coming under exemption? Please first do the research carefully. If you are not coming under exemption, then what is the expectation? So please get the requirements very clear. Once you are done there, go through each of these process, identify what are the critical gaps. Then comes obviously policy definition. You implement and periodically monitor, and once in a year you certify. My only fear and apprehension is if I read the original circular, it says it is applicable from April 1, 2025, right? While I know we initiated this conversation in the last few days, and IFSC has come up with an exemption clarification in the last few days, but I think it has to reassess some of these elements. So you need to be very careful. So I think we have to act on a swift basis, and we have to do it on a war footing basis at this point.
Understood. So it's a continuous cycle. It's not a one-time activity. I think I have some carve-outs or screenshots of the checklist that we would send a set of clients that we generally work upon. Quickly, can you run through us
Sure. So
from
with
your
just an
lens how?
example or an illustrative case, how we are running through on each of these clients, just some examples I've just given for you to be aware. I've just picked up some of these elements of the circular, what we do, what is the expectation, and we check our clients whether you're compliant, non-compliant, where are we on that, and immediately take some sort of an action upon it. And this is where we also apply the proportionality to decide if something is partial or non-compliant. We know what it is, right? Remember, even the framework is maturing, the reporting templates, guidelines are getting matured. But at this point in time, the closest which we can do is try to be gap ready or fix your gaps and say that, okay, tomorrow if they ask anything on the circular, I am able to demonstrate compliance, right? So these are typically where we are looking into, and our expertise per se, we are starting off from readiness in certain cases, implementation in certain cases, of course, periodical monitoring, depending on what the client is picking and choosing. So we have been fairly open, and we have told that, hey, this is what we can do, this is what we cannot do, this is where our challenges, and we have been very consistent on that, right? So starting from your readiness to your implementation roadmap to a sort of a periodical mapping, we are there to help you out throughout the journey, and that is where our expertise is coming into the picture.
Very well. One of the key takeaways for me today has been that resilience is no longer a regulatory requirement. It's a strategic differentiator for our set of businesses. So if something goes out of the regulatory lines, I think we need to plan operational continuity. We need to look at our credibility in terms of a brand, in terms of um, an organization. So thank you so much, guys, for the patient listening. I opened the door for a lot of Q&A. I see a few questions already popping up on my box. We will try and take a few of them. Let me start by the first question, Ravi Jairama. Sorry, Ravi Jayaram. We qualify as an exempt entity under the framework. We operate as a branch. We have fewer than 10 employees. Kindly confirm my understanding of the compliances under these
I
guidelines.
think we spoke about that in one of the slides. So reasonably
Correct.
you're right, Jairam, and I think we spoke in the second slide or third slide.
So he just to complete his question. So his question is on more on they need to adopt the set of
Yeah, so adoption of parent
correct,
companies and other things. You're right. So
correct.
basically,
So
the
they need to,
exemption
yeah.
paragraph 22, you'll have to adhere.
Understood. Nural, yes, yeah, the session is being recorded and the recording will be available on the website. Ravi Jairama tops up his question saying that could you please clarify what is annual certification required to cover? Is
I
there a
just said
fixed
there is
format?
an annual audit.
Correct. Is there a fixed format around it? I think something
No, not yet.
understood. Should the annual report for a branch be submitted along with the parent, or it needs to be separately prepared for the branch?
Separate. Separate. Parent has nowhere jurisdiction in gift, right?
Perfect. Utkarsh is asking what is the stance on failed reporting attempts on phishing and social engineering or any other failed cybersecurity
It
incidents.
will be taken as incident. Question is how have you reported that incident to GIFT CSCRF? And second is sorry, the IFSCA. And second is what action have you taken? I spoke about an incident reporting timeline, including 30 days. You will have to submit a root cause analysis, etc. These are all the things which will be picked up during the audit as well.
Do you think that if there is a failed attempt of reporting this, what is the penal action that the regulator is going to come out with?
At this point, there is no specific mention of penalty, but you generally know that the action could be in different forms in terms of typically how a regulator could do that.
Understood. Bhavna is asking that if the audit referred in para 22 is an internal audit or an external audit.
The way I would interpret it, it would be an external audit because they say clearly that the auditor, whoever is doing, should be a qualified to be doing it. So either a certain empaneled auditor or it should be a person with that sort of an expertise. So I would say it is definitely an external audit, the way we are looking into the guidance.
Understood. Um, you get a copy of this presentation? I think we are going to share the recording, so
The recording
presentation
will
is a
be,
part of the, yeah. Pratik is asking, is VAPT required to be done by external auditor or can we do it internally? I think we answered that. Can we submit external parties audit report directly or is there a format? We also answered that. Bhavana is asking whether the audit report has to be submitted along with certification within 90 days. Yes, from the date of end of financial year, 90 days. For regulated entities claiming exemption under para 21C, can a PO or a director appointed as the designated director, whether the parent, okay, I'm not understanding the question, but yeah,
so
it's
if
a
you are having a regulated entity where you're claiming exemption, the expectation is that you will have to have a designated officer. But again, please bear in mind, the assumption is that the home country, there is a jurisdiction. If the home country does not have a jurisdiction, you cannot claim any benefit.
correct. The home jurisdiction has to be a regulated entity, basically, the parent
Yes.
entity. Correct. We are an RE, not exempted. So we are ISO SOC 2 certified. Do we still need to conduct a separate audit or this certification is enough to be
Yes,
submitted?
there is no sort of an exemption. We are an RE and not exempted, whether you're an ISO or SOC 2, whatever you say, my dear friend. It will help you to showcase compliance over here, but you will still require to get another audit done because SOC 2 and ISO is not based on the GIFT City or the IFSCA regulations.
Bhavana has another question whether the
It will
complete
be the
report has to
complete
complete
report of
report.
compliance under each of the clauses.
Correct. Sonal has a question that we are a leasing finance company. Will this be applicable on us? Yes, we covered it in our first question. What is the applicability?
Typically, every entity who's governed, every person who's called as an RE within the IFSCA regulations for whom the guidelines is applicable.
I don't see any more open
In fact, one of the
questions.
question on VAPT was asked on external internal. There is no restriction at this point in time. The SEBI guidelines talks about only a certain empanel. Here you have that flexibility. But of course, the auditor will evaluate whether the person who's done that, does he have the competence and other things.
Understood. I don't, yeah, a couple of more questions.
One question I thought was also there. We are a small size RE and also have a branch in GIFT. Small size RE is under SEBI cybersecurity, and they have less than 10 there. Small size RE are exempt from cybersecurity audits. Please note, small size RE are exempt from cybersecurity audits. They are not exempt from CSCRF. Please understand that very clearly, right? So if you have to showcase, you showcase how the parent entity is compliant over here, how the policies are common or similar, or how you have a better set of policy. And under the gift, you still have to get an audit done. So in gift, exemption is possible only by way of an audit. That is, in other words, you claim the exemption, but audit is still mandatory. The only three fellows who are will be able to enjoy that without an audit would be the three people whom the gift has clarified. One is a foreign university. Second is a newly established entity, which is a standalone and does not have a parent organization and credit rating agency. Only for these three people.
Sonal has a question that do we need compliance and principal officer in an aircraft leasing company in IFSC? I think you are talking about the regulations rather than the cyber thing, something that we can take off the
Yeah, you could
webinar.
probably write
Yeah,
an
you
email.
can write us on an email. I think the emails are reflected on our screen. Sandeep Nair, a branch entity with a parent not regulated, but a branch has less than 5 members. Will the branch qualify for conditional exemption?
No,
Nara, I believe
there's no
no.
concept of so let me put it very clearly. As far as the parent, if and only if they're regulated only, you will get exemption.
Correct. Mm, I don't see a lot of other questions coming in, but I think we are on last 5 minutes of the webinar. If there are any more questions coming up, happy to take up. Please do share your contact details if you wish to connect later on this day. I think the screen reflects the email ID that where you can write back to us. Is there a format of audit report expected from the regulators, Nara?
At this point, no, but I'm guessing it will come up shortly. Even if that doesn't come, I think the framework is the basis.
Correct. Bhavna, please guide on the scope of audit.
The 20-page circular.
I
The
think
10 pages, beg your pardon.
yeah, we showed you something which was on the Excel side of things. How do we work on
That's
audit
basically.
assignments? Correct. That can be taken as a benchmark, but that's not the complete side of the picture. It's just illustration, guys. So, yeah, I don't think any other questions. We'll wait for a minute. In the meanwhile, I think, guys, we would do a lot of other webinars. Please be connected with us. You can scan the QR, follow our LinkedIn page. We do a lot of stuffs in GIFT as well as in India. So happy to collaborate on various aspects. Thank you, Bhavna, for your kind words. Perfect. I think we are well in time. I don't see any other questions in. Okay, Sandeep has a follow-up question. Uh, just a follow-up. Why won't the branch with less than 10 employees qualify?
No, a branch with less than 10 employees will qualify. My only point is you will have to adhere to the exemption conditions. What is the exemption conditions? That the parent will have to be there, the designated officer will have to share. So those set of conditions you'll have to. So in case you've misunderstood or if I have told it other way around, it should be you will get the exemption, but you will have to adhere to those additional requirements. So if you are not able to adhere to those requirements, my apprehension is might as well focus on getting the entire thing.
Perfect. I think that's the last question that we were going to take. Thank you so much, guys, for the patient listening. Keep following the Incorp India LinkedIn page. We are soon transiting into a new brand name, Ascentium. So, looking out and look forward to connect with you guys on the email IDs mentioned on the webinar link. Thank you so much for your patient listening. Thank you, Nara, for sharing all the thoughts.
Pleasure as
Uh,
always.
me signing off. Thank you so
Thank you.
much.
Take care.